Welcome to Charts This Week. My name's David Linton. I run Updata, and quite a lot's been happening over the last few days. So really we start with financial markets first, and this will give us sort of the backdrop of where we start to look at other markets, but especially in commodities and energy. But here we see the S&P 500 index. This is the 60-minute cloud chart. The market has been trending really since the beginning of September. So for about 2.5 months on this 60-minute chart, we've had clarity in this uptrend. It's been superb. It's been really great. But of course, all trends come to an end. This is a short-term trend. It's been quite a long time running on the 60-minute chart, and we're now starting to test it. And so I would expect that we're probably not going to see a few more weeks of that trend running. And here we see really what happens. You get volatility towards the end of the trend, where the price really did jump up quite dramatically the week before last. Then it's fallen back a bit last week, and for the first time we're through the cloud on the price. We were through a little bit in October, but this is a bit more significant. The lagging line's not through yet, but if we spend the next day or two below this 1200 level, which we closed below on Friday, if we spend really a couple more days below this important 1200 level, that would tell us that this 60-minute chart, the run is over, and we'd expect a retracement in the shorter term. The medium-term picture is still bullish. This is a 5x3, a little bit more sensitive to the daily chart here. Here you see the 1270, 1235 was the intermediate target. And so we didn't quite make it to that, but we've got to a point where we might be retracing now. So just in the short term, the picture is a bit bearish. The medium-term picture is still quite bullish. And here we see the 1-minute chart. We see we had targets given at 12.23, 12.26. We had a cluster there. So this was quite a sure thing that the price was going to jump to these levels. We now have a downside target of 11.93. That's not that exciting, so not a lot of downside. We still have the uptrend, but look out this week for new downside targets emerging. That's what we'd expect if we do wander through on that 60-minute chart. Quite interestingly, here this is a weekly chart. Not many of you would look at the weekly chart, but it just shows that the Fibonacci retracement from the high we saw in 2007 to the low we saw in 2009, we've absolutely been bang on this 38.2 level where we pulled back to, and 61.8 is at 12.28, which was really quite the level that we hit. So this 12.28 level is probably hanging out over us from a longer term trend. So we might just struggle to get through 12.28. So that's possibly why we've run out of steam at this point. If we look at the euro-dollar now, euro-dollar has pulled back quite a lot in the last week or so. We're still bullish on the daily chart, so medium-term outlook is bullish, but we are pulling back to a sort of fairer trend level. Here we see the point and figure targets, a really conflicting picture here. Everyone's talking about currency wars, but the reality is that we're really stuck in a bit of a range here between the low that we saw back in 2002 and the high that we saw in 2008. So we have this sort of back to the top of the range, 156 is the target there, or to the bottom of the range, 102, even parity. So what we're seeing here is a conflicting picture in terms of the longer term picture for the euro-dollar. Here we see the 60-minute chart. This is definitely turned bearish. It's turned bearish on around the 5th of November, and we're below the cloud here. We need to get above sort of the 137 level for this shorter term trend to reverse. But at the moment, it's downside pressure, and that's showing up in the downside targets. We're seeing 132.80, 135.40, 134.40. Quite a lot of downside thrust. We had a little mini counter trend move, which was sort of met, but the downside targets are the ones. And remember, this chart is changing quickly. It's a euro-dollar. It's very liquid. The 1-minute targets will come in as the week progresses. Here we see the sterling chart. This is not looking so bearish like euro-dollar. Sterling is holding up. We are above the cloud here on the 60-minute, unlike that cloud we just looked at. So the picture for sterling is still pretty bullish, although we're in a bit of a range against the dollar. So we've got not very exciting targets because we're not trending. So sterling versus the dollar is pretty much in the very short term, holding the position. If we look at euro sterling, we see again that the euro is falling on the 60-minute chart. So sterling looking pretty strong at the moment, euro looking pretty weak. If we go to oil, here we see last week, of course, the big news was that we did make a 2-year high in oil, but really it was only short-lived. And the big question now is, were we just testing the top of a range, or was this the beginning of the breakout? Quite an interesting idea, which we'll explore now. But here we see the correlation between oil and the stock market, and they are very highly correlated at the moment. This is the daily chart. This is a 65-day correlation, so if you like, a quarterly correlation, and it is true that oil and the stock market are highly correlated. That means if the stock market falls this week, oil is probably going to fall with it. It's a great sentiment index for us. Here we see the point and figure targets for oil. This is WTI, 124, 111, 96, 87 was met. So we do have upside targets. The most significant thing about last week was that when we did get that new high, and we got a closing high, that negated the downside target of 35, which was taking us back to the bottom of the range. So it does imply that even though we might in the short term be pulling back from the top of the range, it does imply that the oil is now medium to long term likely to make new highs, probably above $100, and back to the bottom of the range is now off the cards. That target has been negated off the chart. We are in a new uptrend. Significantly also, from the 147 high, the trend has been broken in the last several weeks. So in fact, the picture for oil medium term does look pretty bullish. Here we see the 60-minute chart. Here we've got the correlation again between the S&P and oil, and here we do see that in fact they are quite highly correlated in the short term as well. So I'm expecting that if we see down moves in the S&P this week, that exhaustion of that short-term trend, it will follow through in oil, and we'll see pressure on oil to the downside as well. But on the 60-minute chart, we see that we're definitely through on oil. So we're not through on the S&P yet, but we are through on oil. Oil is likely to pull back probably this week, so there's a bit of downward pressure. And if we go to the 1-minute point and figure charts, remember this picture changes quite rapidly. We've had an upside target of 87 this morning that has been activated, so not quite as powerful as back to the top of the range, but we do have a downside target of 82.70 as well. So, and that is the favourable one because that is with the trend. So I guess the key thing here this week is to just keep an eye on these 1-minute targets on your oil charts. They will change as you get new price movement coming in. And if you're trading Brent, these are just the targets for Brent short term. 88.10 is the upside target, but we do have downside targets of 84 and 81.80. So a conflicting picture there. Probably a little bit of a short term up move, but we've got these bigger targets to the downside. If we look at nat gas, this is US nat gas, the daily chart. Here we see the cloud. 431 is the sort of level of nat gas that we need to get above. And quite key that. So even though we had this contract jump at the end of last month, we are still in the sort of bearish territory there. So we do need to take that into account with nat gas. And if we look at the targets, the point and figure target, we have had $5.40 activated with that up move because we moved up, we pulled back, and then we went higher. That's the significant thing, as we pulled back, but we went then higher. So that has given us an upside target that has been activated. We still we had this target of 335, which was met on the downside, and we've got this amazing target of $1.30, which is probably too much of a downside target. But the key thing is that the picture on nat gas is still quite mixed. If we look at the UK gas, this is NBP summer 11. We do see here that we've been trending right down. We've got to get above this 52.50 level to be in an uptrend on NBP. So at the moment, the pressure is probably on the downside on the daily chart. And if we look at the 60-minute chart, so this is the 60-minute cloud, we see again that we do have downward pressure way below the cloud. So I tend to favour the downside on gas this week. We do have an upside target of 48.30 that has been activated, but we also have a downside target of 43.45. So really quite key. These are all OTC prices, but remember, NBP has become quite liquid on ice. So what you can do is just consolidate these two into one and actually actually get a combined picture. But here we see the volume on OTC. It has been consistently stronger, but ICE is starting to kick in. So it's quite interesting that the ICE that contract is becoming very liquid. So this is the December 2010 contract. So it's worth keeping an eye on the ICE price as well. Here we see German power. This is the daily chart. A real kick up at the end of last week on the price and power. So on the daily chart, the medium term, we're still bearish, but we can't ignore the fact that on the 60-minute chart, we see here that we really have got a trend change. So whilst power has been a dead cert to the downside for probably the last couple of months, we've kicked up again. So short-term power is starting to look quite interesting. And if we look at the 1 minute targets, and I know a lot of you use these targets, it's been very accurate. 46.55 was the low point that was predicted. We now have this kick up. We've got a target of €50.45. That's psychologically quite important. That has been activated as well, so we do have an upside target of 50.45, but we also have this counter trend target not yet activated of 47.70. If we get a move below 48.50, then 47.70 will be activated. So we've got a very interesting picture developing in German power this week. And really at the moment, with this uptrend, you probably would favour that upside target of 50.45. But keep an eye on how the price develops here, because as the price develops, it will start to give you clues as to whether we're going to the upside or whether we're going to this 47.70. So keep a very close eye on this chart this week. 1 minute point and figure chart of German power. Nord Pool, really quite an amazing breakout after 2 months of going sideways. Really an explosive break last week. So we've seen big moves in power in both the German market and Nord Pool. Keep an eye on your 1 minute targets here, your point and figure targets. Coal, really quite an interesting chart. This is the 60-minute chart. We're above the cloud. Coal is the bright spot in energy at the moment. It's looking really quite bullish. I put the correlation on here between coal and the US dollar. So here we see euro dollar, and we see that in fact they're not highly correlated right now. The euro's been falling, so the dollar is actually relatively strong. So the dollar story in coal is not really what's driving it. So just keep an eye on the correlation here as well. Coal in its own right is looking quite bullish. Here we see the 1 minute chart. We've got upside targets of 107.70, 108.80, 112.50. So a lot of upside potential in coal. So keep an eye on your 1 minute charts for targets on that. And then if we look at emissions actually last week, having been in a downtrend, moved up pretty much in line with what German power did. So in fact we've come out of the downtrend. So on the 60-minute chart we've now got emissions kicking up. If we look at the 1 minute targets on emissions, we see we are trending up. This is now a very short-term chart, remember, and these new targets will kick in all the time. So 1508 was met, 1524, which is with the trend, is the next target we'd be looking for. We do have a downside of 1487, but it's counter-trend, and it's looking like already that these upside targets are being favoured. Nothing terribly excited in the upside targets here on emissions, but that's giving you some little trades to the upside in line with this short-term up move. So emissions looking great at the moment for this week. Gold, here we see the 60-minute chart of gold. On the 60-minute chart we have wandered through on the price, so we're a bit bearish short term this week on gold. Again, I've put the correlation on with the euro, and you can see that the correlation is all over the place. The one thing we know about commodities and the US dollar is that everyone talks about that relationship, but in fact that relationship's changing all the time, as the correlation shows. So gold is actually just looking bearish on its own. Forget about the dollar. And here we see the 1 minute chart of gold, and what we do see is we've got downside targets of 1340, 1335, 1342. We're at 1368 at the moment. So I suspect that gold is going to have a bad week. So that's it for this week. Until next week, happy charting. See you then.